If you have reached your state pension age in the United Kingdom, or you help someone who has, this one is for you. Especially if you live with a long-term health condition, or you quietly care for a partner who does, and you have always half wondered whether the extra support payments people talk about actually apply to your situation. Here is the truth. Most short overviews skip the rules around UK pensioner benefits attendance allowance, CARES allowance top-ups, the pension credit boost, council tax reduction, the underpayment corrections. The backdating window are genuinely easy to misread. The forms catch a lot of careful, intelligent people out. Martin Lewis estimated on his own podcast that roughly 1.1 million people who qualify for attendance allowance alone never claim it. Not because anyone is stupid, because the way these payments work is not always explained properly. So today, we walk through 5 of them properly. And I am going to flag right now the one thing that quietly decides nearly every attendance allowance claim, the thing that, when people get it wrong on their form, gets the application refused. We get to it toward the end. Stick with this through to the climax. Quick context before we start. This video is general educational information for UK adults navigating pensioner benefit decisions in the 2026 to 2027 year. The goal is to help you understand how these payments work, including the conditions and trade-offs. Most quick overviews skip, so you can decide whether any of them apply to your situation and look further. Everything I share comes from publicly available official information, the Department for Work and Pensions, the UK government's official benefits pages, Age UK, and Citizens Advice, and I name each source as we go. This is not personalized financial, tax, legal, or benefits advice, and nothing here is a promise that you will receive any specific amount of money. Everyone's situation is different. Before any decision, please speak to Age UK, Citizens Advice, or a regulated benefits advisor who knows your circumstances. Right. Let's get into it. 5 payments. We take them out of order on purpose, building up to the one that matters most. Quick question for the comments. Have you ever applied for attendance allowance and been refused? Or has someone in your family? Drop a comment and tell us which condition you applied with. Your comment will genuinely help another viewer. Number 5, the state pension underpayment correction, sometimes called the LEAP exercise. Between January 2021 and the most recent published update, the Department for Work and Pensions identified over 130,000 cases of state pension underpayment, totaling more than £800 million. The biggest single group affected married women whose pensions should have been uplifted on their husband's national insurance record, but where the department's older systems never did the uplift automatically. According to the department's own figures, reported by Pensions Age and others, the average correction for affected married women has been around £5,553. For widows, around £11,725. 2 crucial conditions for whether this applies. You reached state pension age before April 2016, so you are on the old basic state pension, not the new. And either you are a married woman whose husband reached state pension age before March 17th, 2008, or you are a widow whose pension was not reviewed when your husband died, or you are over 80. Pause this and write down those dates if any of that fits. The department has been working through these cases automatically, but in many of the pre-2008 ones, the affected person has to ring the pension service themselves to trigger the review. Age UK and Citizens Advice can help with that call. It is not a windfall scheme. It is a correction of historic admin error. If the dates do not match, it does not apply. Number 3, council tax reduction under the pension age scheme. The average council tax bill in England now sits above £2,000 a year. Age UK and Citizens Advice both publish the rules for pension age claimants clearly, and they are more generous than most people assume. If you receive the guarantee credit part of pension credit, you can be entitled to up to 100% off your council tax. Bill drops to zero with no savings ceiling. If you do not receive guarantee credit, but you have a low income and savings under £16,000, you may still get a partial reduction. Pause this and write that figure down. £16,000 is the savings line that flips the calculation. The catch: most people miss your local council does not check your entitlement automatically. You apply on your local council's website in the Council Tax Support section. 2 more things. Per Age UK, if you live alone, you also get a single person discount of 25% separate from any reduction. And if you also receive attendance allowance, that may strengthen your council tax case, because some councils treat it as a marker of disability. Now, if you care for a partner at home and you have always assumed there is no point applying for carer's allowance because of your own state pension, the next one is for you. That assumption is genuinely costing people money. Number 1, state pension backdating. And the trade-off most people miss: if you have reached state pension age and have not yet put in your claim, you can ask, when you do claim, for your start date to be backdated by up to 12 months. According to Age UK's state pension fact sheet, you do not need to give a reason. On the full new state pension rate of £241.30 a week for the 2026 to 2027 year, 12 months of backdating works out to roughly £12,547.60 as a single arrears payment. Here is what the short version of this story leaves out. Both points confirmed by Age UK and the Low Incomes Tax Reform Group. First, taking backdating reduces your ongoing weekly pension compared with what you would have got if you had instead allowed the system to treat the delay as a deferral. Because under the new state pension, every 9 weeks of genuine deferral adds 1% to your pension for life. So you are choosing between a one-off lump sum now and a higher weekly pension forever. For most people who expect to live more than around 17 years past state pension age, the higher weekly pension typically wins on paper. Second, the backdated lump sum counts as taxable income. If you are unsure, Money Helper, the free government-backed pensions guidance service, can walk through it with you. Number 4, carer's allowance, underlying entitlement. And the carer edition almost no one claims. This is the one almost everyone misses, including people already on pension credit. Carer's allowance, according to the official government benefits pages and Carers UK, is £86.45 a week for the 2026 to 2027 year, payable to anyone caring at least 35 hours a week for someone receiving a qualifying disability benefit, including attendance allowance. The catch is the overlapping benefits rule. If your own state pension is higher than £86.45 a week, and for nearly everyone on the new state pension it is, you will not be paid carer's allowance in cash. You apply, you get a refusal letter. Most people close the file. Here is what that refusal letter actually contains. According to Carers UK and Age UK, it confirms underlying entitlement, a legal status, saying you meet every condition for carer's allowance except the overlap with your pension. That underlying entitlement is what unlocks the carer edition on pension credit for the 2026 to 2027 year. The carer edition is £48.15 a week, which is £2,503.80 a year, added to whatever pension credit you receive, or in some cases bringing you into pension credit eligibility for the first time. Pause this and write down the sequence: apply for carer's allowance. Get the refusal letter. Contact the pension credit team and ask for the carer edition. That sequence is the whole game. 4 done. Number 2 is the one I flagged at the start. Highest first-time refusal rate. Most confusion in the comment threads, and the clearest decision rule once someone actually explains it. Number 2, attendance allowance. Non-means tested. worth up to £5,959 and 20 pence a year. According to the Department for Work and Pensions 2026 to 2027 benefit and pension rates, it pays £76 and 70 pence a week at the lower rate, or £114 and 60 pence at the higher rate, tax-free. Your income, your savings. Whether you own your home, none of that matters. Now, the 3 conditions that actually decide every claim, according to the official attendance allowance guidance. Age UK, fact sheet 34, and citizens' advice. Condition 1, you must be at or past state pension age, and you must not currently be receiving personal independence payment or disability living allowance. If you reached state pension age while already receiving PIP, you keep your PIP, you do not move to attendance allowance. That is the single most common misunderstanding in the comment threads. Please pause and write that down. Condition 2, you must have needed help with personal care or supervision for at least 6 months, unless you are terminally ill, in which case the claim is fast-tracked. Applying before 6 months will get you refused. Condition 3, and this is the one that decides most claims, the form is assessed on your worst day care needs. Not your average day, not your best day. Industry analysts and several care sector organizations estimate roughly 6 out of 10 first-time applications are refused. And the most common single reason, confirmed by Age UK and Citizens Advice in their appeals guidance, is that the applicant described how they manage on a good day rather than how they struggle on a bad one. The decision maker only sees the form, so when you fill it in, you describe the falls you prevented, the nights you could not sleep because of pain, the medication you nearly missed, the bath you could not manage alone. Age UK runs a free form-filling service in many areas. Citizens Advice does the same. If you can get help with the form, do. Quick illustrative example, a composite built from Age UK case patterns. Picture Margaret, 68, a retired teaching assistant from Bolton. Worsening osteoarthritis. About £12,000 saved, she had assumed those savings ruled her out of attendance allowance and never applied. After watching a walkthrough like this, she filled in the form, describing her worst mornings rather than her best, was awarded the lower rate, and went from getting nothing to roughly £3,988 a year. Tax-free. That is the lower rate of £76 and 70 pence. Multiplied by 52. She then asked the pension credit team about the carer edition for the years she cared for her husband. One form. Worst day evidence. Help from Age UK. That is the playbook. Descending recap. Number 5. State pension underpayment correction around £5,500 for married women. Around £11,500 for widows. Only if your dates match. Number 4. Carer's allowance underlying entitlement apply. Get refused. Ask pension credit to add the carer addition. Number 3. Council tax reduction under the pension age scheme apply through your local council. Number 2. Attendance allowance. 3 conditions decided. Worst day evidence is the one nearly every refused claim got wrong. Number 1. State pension backdating up to 12 months as a single payment, but it reduces your ongoing weekly pension compared with simply deferring, and the lump sum is taxable. 3 things. 3. If any of these 5 looked like they might fit, the official guidance lives on the UK government's own benefit pages for attendance allowance, pension credit, carer's allowance, and council tax reduction. Verify your specifics there before any decision. 2. For the form filling itself, Age UK and Citizens Advice both run free. Regulated help. They have done it thousands of times, and they know the language the decision makers respond to. 1. Before any major decision, Talk to a regulated benefits advisor. Doing nothing because you assumed you would not qualify is the one mistake almost every commenter on every video like this regrets. Choose to find out for yourself. If this helped, the person who probably needs it most is the friend or family member you know who has reached state pension age and lives with a long-term health condition and who has never applied for any of this. Send them this video. One conversation can change a household's income for the next 10 years. Next time, we go inside the attendance allowance form itself, page by page, question by question, with the actual phrases the decision makers respond to. If you did not have a pen handy for number 2, scrub back to the 11-minute mark. That is where the 3 decision rules live. See you in the next one.